Let me ask first how you intend to get back to the black here. Is it pharmaceuticals that you expect to deliver you back to profit?
No, I think if you kind of recall the strategy that we presented in February, we tried to simplify things. We said that it would be executed in 3 phases, as we call it, stabilize, build up, and then build out. And in the stabilize phase, we recognized that the headwinds would maintain, that we would have a difficult industrial environment. Therefore, we would focus primarily on costs and, as we called it, self-help. And I think if you look at the numbers closely, you'll see that that is actually taking hold. We're getting our costs under control. And that gives us the confidence that the strategy we introduced in February is beginning to take hold and that we will deliver on 2017 aspirations, not because of any one industry giving us, let's say, tailwinds, but rather because we are managing our business and we are stabilizing our business.
So your focus on cost cutting, does that mean we're not going to see any M&A action this year? You're not going to still be looking at bolt-on acquisitions to grow the business?
No, we said that that would be part of our plan, but after the stabilization phase. And if we're going to continue on track as we think we are, then this probably wouldn't materialize until the end of the year, maybe early next year.
Good morning to you, Thomas. It's Sky Johnson in London. Cevian Capital owns just shy of 30% of your business. Are they on board with the strategy at the moment? Any sign that they could be thinking about an exit?
I think, Cevian's been on board for quite a long time. They have 2 members on our supervisory board, and of course, when we presented and developed the strategy, they were really a part of the process. So I think they've been on board a while. They show no signs of letting up. You probably would have seen a slight uptake in their percentage of shares that they own in the company. That was a result of our cancelling the 4% treasury shares we had. But I think in terms of an anchor shareholder, they're the kind of person you'd want to have on board, and I'm quite happy with their involvement.
Yep, they talk about active ownership on their website, which is always interesting when you run a company. Thomas, can I ask you a more pertinent question to this morning? Do you run any XP in your IT department? Have you experienced any problems this morning when your staff turn on their computers?
That's a good one. I was actually checking this over the weekend, and touch wood, we've seen no effect, so it's steady as you go. So fingers crossed, but no, we're not seeing any effect of the hack.
So I just want to nail down the plans or the forecast for fiscal year 2017. You've said you expect to return to positive cash flow. Is that still the plan? And is there any change to your outlook?
No, I think what we've described is an industrial landscape that more or less fits what we see today. So, if I look at our overall markets, they remain difficult, and I think you're seeing that from our peer group as well, but that's expected. If you look at oil and gas, then the oil and gas companies have been very successful in taking out costs, roughly 40% in the last 3 years, and of course, we're part of that cost saving. The oil and gas operators are now locking in those savings, so we're seeing the renegotiations of contracts is coming to an end. So although we had ongoing contracts, customers were coming back and taking another bite of the apple, but now they've managed to lock those in for the next 2 to 5 years, which means that around $50 a barrel, they're able to be cash flow positive and begin to look at more stable planning. If you look at the U.S., the rig count, the land rig count is now above 600, double what it was in 2016. So also there, we're beginning to see a pickup in activity, not only in upstream, but also in downstream, the location where the feed gas goes, so that's chemicals and petrochemicals. The Middle East for us is still a little bit hesitant, but chemicals are again picking up there. Smelters and other industries are beginning to show signs of revival. So given the state where we are on the industry, we are confident being able to manage our costs. That'll take us in a better position. So taking out capacity, managing SG&A. So therefore, we are on track to improve our EBITDA, our bottom line performance, and towards the end of the year, we think we can turn the cash curve the other way around.